Yes, welcome back everybody to Altcoin Daily. My name's Austin. The upcoming Federal Reserve meeting is next week, specifically Tuesday, Wednesday, July 26th, 27th. And if you hold Bitcoin, let's talk about how you should prepare. Because right now, in 2022, the Federal Reserve interest rate is already up to 1.5 to 1.75%. That is nothing compared to what we saw in 2006, which was up to 5.25%. We can also compare it to around 2000, 2001, around 6 to 7%. And of course, back in the early 80s, when the Fed pushed the interest rates as high as 18 to 20% at one point to combat the crazy inflation we saw back then as well. So knowing all that, understanding that right now we're still only at 1.5 to 1.75 today, and then knowing that the next Fed meeting is upon us, it's coming up, let's talk about what that means to me. Like always, check the timestamps down below in the video description. Check the timestamps. We will be reviewing altcoin news as well today. But let's jump in, gaining some perspective from veteran investor Mark Mobius. Now, Mark has seen rate hikes, he has seen recessions, inflation over and over and over again in his career, and he has great perspective on the standard playbook, quote unquote, of the Fed. And remember, Jerome Powell has already stated that you should probably expect another 0.75 increase in next week's meeting. But how far will this go? With last month's inflation numbers already at 9.1% increase year after year, a 9% inflation. Should we still expect a 75 basis points increase? And then how much further up after that? This is about a 45-second clip. It sort of jumps right into it at the beginning, so pay attention from the start. Let's watch this clip and then discuss.
Think we're what inning is the United States in, Mark, in terms of hiking? What do you think?
I stick to my initial statement that you got to read the playbook. Playbook of the Fed is you've got to raise rates above inflation. Now, inflation is 9%. That means interest rates have got to go up to higher than that, assuming, of course, that inflation does not go down, okay? But as it looks now, 0.75% is nothing. It's got to be 1, 2, 3% rises in order to really attack the inflation in the view of the central bank. I'm not particularly enamored by that approach, but that's the point.
Okay. Short, sweet, to the point. I like it. If you hold Bitcoin, let's discuss what he just said and what this means to you. Here is a chart that I like. 50 years of US inflation compared to 50 years of Fed hiking or lowering interest rates. From 1970 to where we are today. And in that last clip, Mark Mobius was very clear that the standard Fed playbook is to raise interest rates at least above or equal to where US inflation is. And that's true. Notice how this green and yellow, green is inflation rates, yellow is interest rates. Notice how the yellow often matches up or goes above what the green is to try and suppress inflation. Now, this chart is a little out of date. Inflation numbers as of last month, year to year, like I said, were 9.1%. That means if nothing changes for the rest of the year, interest rates are at least going to be over 9% by year's end or until inflation is subdued. People are speculating for next meeting next week, we are at least going to get a 0.75 basis point hike. That is what Jerome Powell has hinted at we should be likely to expect. We saw a 0.75 increase last time. He said probably the same thing this time. Or the other speculation is a full 1% increase. Let's go into a little bit more detail on this. Inflation surged to a fresh 4-decade high of 9.1% last month. And Fed officials, as well as other parties, are worried of a full 1 percentage point rate hike, expressing their preference for a more delicate 0.75% percentage point hike. Such a move would raise the federal funds rate to a range between 2.25 and 2.5, which would still be at least 6 percentage points below the current headline inflation rate. Now the Fed has told us what they expect for the end of the year. They expect the federal funds rate, interest rate, to eventually to be around 3.4% by year's end, while inflation is forecasted to be at 5.2% by year's end. And obviously, from everything we know of the Fed, they have underplayed inflation over and over and over again, so I would suspect this would probably be much higher. And whatever inflation gets to, I would expect the interest rate to grow to match based on the history of the Fed. Now, why this matters to you and me, for those who hold Bitcoin. This dynamic is being closely watched in the Bitcoin market, partly because the price performance of the largest crypto by market cap, Bitcoin, has recently been correlated to all other major markets. Meaning the more aggressive the Federal Reserve is, the more suppression comes to all major markets, as well as with higher interest rate hikes, higher borrowing costs will eat into corporate earnings and slow the pace of investment in the overall economy. Okay, give me your thoughts on this down below. Do you think we'll see a 0.75% rate increase, or do you think we'll see a fully on aggressive 1% increase? Give me your thoughts down below. And now before we get to altcoin news, like I said, check the timestamps. Let's first finish this clip of veteran investor Mark Mobius giving his thoughts on when these rate hikes will end. Does he see end of the year, going further into next year? And also, although unasked, he does share his bearish thoughts on cryptocurrency. Watch this, then we'll review.
I don't know. I don't know what you mean, what you think as far as duration goes. Does that sound like a period of years to you, or more than a year, so that you wouldn't be that bullish on the U.S. market for another year?
Well, you must remember the U.S. market has already tanked. I mean, if you define a 20% decline as a bear market, we're in a bear market already. It can go lower, probably will go a little lower, but the market has somewhat already discounted a lot. But let's keep an eye on Bitcoin and the cryptocurrencies. As you know, all of those cryptocurrency exchanges are in trouble. And I fear that a real further decline, of course, cryptocurrencies have recovered a little bit, but if they decline substantially more, then that would be a signal for reaching the bottom of the stock market as well, because it's really a very good sentiment indicator.
Okay, let's break this down. On the one hand, he does give a sort of positive reminder that we are by no means at the beginning of this recession, correction, crash, whatever you call it. We're right in the thick of it. A lot of it has already happened, and although he can see another leg down for markets, we're probably somewhere in the middle or closer to the bottom than the top, in Mark's opinion. On the other hand, he comes off as ultra bearish on Bitcoin and crypto, but for those OGs in the space that have been through bear markets before, nothing new. Usually Bitcoin in bear markets corrects at least an 85% correction from all-time highs. If we saw an 85% correction from the all-time high of around $69,000, that would take us to around an $11,000 Bitcoin. Not saying it will happen. Maybe this was the bottom. I can't see the future. I'm just DCAing on the way down like everybody else. But if we dipped even lower, that would be normal for Bitcoin based on past bear cycles. What about altcoins? Well, obviously, altcoins are more speculative, more risky. We all know this. They often oscillate around Bitcoin. When Bitcoin pumps, altcoins pump harder. When Bitcoin dips, altcoins tend to dip lower. Time will tell. Give me your thoughts down below. And next up, in the latter half of today's video, let's talk about recent altcoin news that you should know as an investor. And by the way, for those who haven't already, be sure to check out our interview, which just dropped, with Mary Spio, who's a space engineer, entrepreneur, and founder and CEO of Seek, talking all about the metaverse. Seek this out. Great interview. But next up, first piece of news, a report from Boston Consulting Group, crypto to reach 1 billion users in 2023. And they do provide the context to back this up. In a joint report published by Boston Consulting Group, BitGet, and Foresight Ventures, data shows that crypto adoption is still very low compared with traditional investment assets. According to BCG, only 0.3% of individual wealth is invested in crypto, which is incomparable with the 25% put into equities. The report concludes that this shallow investment penetration means that there's still a lot of room for more substantial growth and adoption within the crypto industry. They also provide this chart of expectations for the future, comparing Web3 crypto to the internet and when they feel crypto will reach 1 billion users. In addition, the report compares the internet's adoption curve to reach 1 billion users with current crypto holders and Ethereum addresses with non-zero balances. The report mentions that there is plenty of growth to come. And in conclusion, what they found is, by comparing the data, the researchers predicted that crypto users may reach 1 billion users by 2023 if the trend continues. And of course, as they say, the trend is usually your friend. But anyway, that is the video. My name's Austin. Like always, see you tomorrow, and be sure to check out the interview. See you tomorrow.